Hi, everyone. How's everyone doing today? TGIF, everyone. What a week. I am Mark, Sinatra, Surrender, Brock. How are you, Kevin? Okay, so yesterday I went through the exercise, because we were on investing.com of, the S&P making successive new highs after this break here we had in the S&Ps, and that was the key reversal that we had in NASDAQ. And then we had another new high in S&Ps, and we had a lower high here, and then one more high in S&Ps up here, and we had a lower high here, and Nasdaq really took it on the chin yesterday. And if you want to see an ugly week, it was one thing to have a key of reversal on the daily, but we just missed making new highs this week. It was, I think, exactly the same high here and here. Might be different on different platforms, but check out the weekly. That's an ugly candle. It's also a 2-week reversal. So I think I was getting criticized for, shorting S&Ps at the 88.6 level. That was up here at, yeah, you could see it better this way, at the 3260 level. And yeah, there was, heat. S&Ps don't look as weak. Of course, what led it up is leading it down, but we're back to about unchanged on the week in the S&Ps. But compare that to this candle. I don't care what you call it, rotation or not. This was outperformance and NASDAQ all the way up from this March low. Steve would show the chart of the big spread that's probably going to revert to the mean in the S&Ps versus Nasdaq 100 or FANG. And then since we were on investing.com, I just showed a few issues that everyone's long. Apple got hit hard. That's 2 ugly weeks and a sell signal. So this is Apple. Okay, pretty ugly. You have a couple of moving averages that could be it down here, 349 or 300. Most guys like Mark Newton, who I interviewed, were looking for more trouble in August. But you get tied into waiting for cycle dates, and you miss things. So all I know is price action's pretty negative in Apple. Talked about Microsoft being able to get back to 200. Here we are, back under 200. There's some problems here. And then I showed Google, which got clobbered. Okay, and Amazon. Amazon to me looks like 2600 is viable, even if it's just a ABC. So I think this week was decisive in NASDAQ. Yeah. Okay, so that was a day after the new moon, Ben, and there was a planetary opposition with Saturn on Monday. So it was actually Wednesday, I think, was high. And in the S&Ps, it was yesterday, actually. So we made it, or it was Wednesday evening. Can't leave the week without talking about the spectacular move in silver. You know what I mean? Look at this weekly chart. I could understand why Steve would want to be a buyer at 19. So you have to give it hard to get on board something like this. I think that a lot of people would like to have a chance to buy it at 19. I don't know if they're going to get it that cheap, maybe 20. And gold almost at new highs. We are getting some divergences here. and also a terrible week in the dollar. No reason. You look at the dollar, it's a pretty ugly candle. It looks like we're headed towards this area, 92. Here's where all the stops are. So let's see what happens next week. That's 94.65. Have we already taken it out yet? Okay, so we've already cleaned out the stops here. So now we'll see what kind of extension we could get over the next couple weeks. Um, and it was interesting the other day when the S&Ps were selling yesterday when the market was selling off, it was doing so with a weak dollar. Okay, there wasn't a big bid. Yeah, we had a chance to buy silver for months. I actually have physical silver, but I'm not going to rationalize it. I missed the leverage play because I have, you know, silver coins all over the place. Um,
What's your
and
address again?
it's San Marcos, California. I think I bought them last year when silver was trading 12, $13, something like that. Just, I bought they call it junk, but they're beautiful, silver eagle coins. It's not like they were the quarters and the silver when the US had silver in their coins. They say there's a coin shortage in the US. People are hoarding their, their worthless quarters and nickels and pennies. I don't know. There's no copper in pennies if you think that there is. Anyway, oil, I gave it a chance. And you know what it held? It's pretty interesting here. The 2-week off number in oil is 40.50. You just count back a couple candles, 40.58. We almost got there before the bounce. What was this low? 40.71, so 13 points away from it. This could go either way. Maybe it's just an ABC and we're going to blow again. But here is the line in the sand for being long crude oil. We take out 40.50. I think we're going to 38.5 and then lower. So that's kind of my review for next week. I'm not looking for any type of major reversal. I think we got some reversals this week. And when you have some reversals like you have here, um, normally you don't try and fade it right away. And Blake and I have this line. There's a reason why you have this line here because it goes all the way back to previous historic highs at that 97.80 level. And I know there's an example of it. Yeah, look how it held it right here. Once we got above it, these were old historic highs. And look at that. And actually, if you just do it arithmetically from here, and this is 700 points from here to here. So from here, it's going to take it to 9,700. And if that happens, I think we're going to see 84. So I think this was a pivotal week in NASDAQ. You're not late. It's just like saying, uh, I was late in silver because I didn't buy the March crash down here, but you weren't late buying it here. You weren't late buying it here. You weren't even late buying the breakout over 19. So just because you don't catch the day of the high or the low, don't let your head talk you out of a trade that's giving you confirmation that you have a high or a low. You don't have to be long from the bottom, short from the top to take a piece out of the market. So that's my motto is we're just here to take a section. We're like a surgeon. We're not going to, disembowel everyone. We just want to take a piece. And I know this is self-talk that if I don't catch the turning point day, then I feel late and I'm looking for maybe one more high or one more low to give me the opportunity to do what I didn't do previously. So just, it's all in our heads. Don't let that talk you out of things. Yeah, I know. It's always easy in the rearview mirror, but, wasn't easy to short stock indexes. Yeah. Okay. Um, I want to remind everyone that the Friday's my favorite day to tell people to subscribe because they have all weekend to learn to navigate the site and get used to it. The team has been trading great. Okay. Down a little bit here, down a little bit here. Uh, yeah. So here we go. Plus 2%. Blake booked it. Nice trade on Euro. And he shared it here in face too. Nice trade by Stephen Aussie. Some small losses. Okay. So Blake's been pretty aggressive. A lot of pips coming his way, took advantage of the dollar weakness. So Steve did too, and team's doing a great job. Let's see, 52% hit rate. So if you have good profit risk ratios and you're right half the time, you should make money if you manage your risk. So good job by you and the team, Blake, and capturing nice pieces of dollar weakness over the last week or so. Way to
And
go.
thanks. Thanks. We just have a little bit of a dollar breakdown, and I really don't think it's over yet. But for now, I think you have to be pretty careful with dollar shorts as the euro's approaching some pretty key levels of resistance. So, but I appreciate that. We're gonna go into some. We're going to go into some charts here and talk about like where the euro's at and what other things are some of these other markets are doing, and let's get into it. And because I've only got I've got a few minutes, and I have to be able to get the bias chart done. But Coach, you ready for the weekend?
Are you kidding me?
What are you doing? You doing anything exciting?
Yeah,
Just kidding.
I'm gonna wear my mask and run around and try and sell my silver coins out on the street.
Very nice.
Cash out a little bit. No,
Speaking of,
you can still go to the beach here. All right, so
yeah, are they
yeah.
closed still? They are.
No, they didn't reclose them. You could go to the beach and sit
Oh,
on the
you
beach.
you can
Still
go
could
to the
do it.
beach in Southern California. Well, that sounds good. Through a
Yeah,
raging pandemic, that sounds like a great idea.
yeah.
You know, I
I've
was
been hiding out since March or February, Blake.
the thing is, I was reading something about the resurgence in Australia, and the problem is I mean, the problem that people have during a pandemic, and you know is that psychologically it weighs on people. So you have like Australia, going into a lockdown on a second time, typically, from what I was reading, probably won't work because people are so lax. They have a hard time re-engaging that behavior of being in a lockdown. So,
Yeah.
if we have to go into a lockdown because we have a second wave in the fall this year, it's probably going to be worse than because people are just they're over it. I mean, I get
They'll
it.
have to enforce it with, yeah.
No, I don't see that happening. But anyway, all right. Hey, it is Friday, and we
Yeah.
do have some stuff going on. So let's talk about the markets, and let's talk about the importance of where the euro's at. And if you guys missed this chart, there's the euro dollar big multi-year trend line coming in,
Uh,
right? So if you're buying the euro above 116, you've got to be very well aware that we're knocking our head into this trend line. Now, if you take the excuse me Sorry, if you take this trend line, you move it to the top of the spike back in 2014, it takes us to 118, where that's where our flag actually extends to. But what I think you have to do initially is try to connect as many tops as possible, and that's going to take us to where we're currently at, about 116.50, roughly 116. Was the high here yesterday was 116.26. So I'm going to write that down as really key resistance is 116.25. That's key. Now, any dip, in my opinion, down to 115 is going to be a buying opportunity. The question is, like I said yesterday, are we even going to be able to get down there? I don't know if you guys recall the analysis from yesterday, but let me refresh your memory. Do you guys remember this? And I said, hey, look, it's kind of like a double top, but if it breaks lower, don't expect that double top to play out. There's buyers going to be down below, and it's probably only going to just take out some stops and reverse to new highs. What happened? This is yesterday. Remember, 24 hours ago, we were talking about exactly that.
The bear
right?
trap. Yeah.
Yep, it was a nice little bear trap, and then it went up to new highs. Now, I still feel that dips are going to be pretty well supported here. So, will we get a dip all the way down to 115? I don't know. But I do think that the dips down to this level here at 115.50 are going to be really well supported should we get down there. So I'm going to write down 115.
That was a great call, Blake. Well done.
What?
Really good. That was a great call.
That?
Awesome.
Oh, thank you. Thank you. 115.50. We are in a bullish trend. Okay, so let's go over to the cable. So, the cable's above the 200-day moving average, and that's the thing that we have to keep in mind. We're above this this downtrend line. You see the 200-day moving average holding above there. Still, I believe that any dips back down to 126.70 should find support. Okay. Resistance, the 161% extension of this move takes us to 127.90 in case we start squeezing. Okay. But we are bullish, especially while we're above 126.50. All right. Oops. Trying to just get this stuff done. So for you guys, Aussie, we've come down to 70. The low today is 70.63. So 70.70 was the breakout point. Remember that? So today's low is 70.63. So we have to write down 70.70 and then 70, because that was the breakout point, right? That's going to be key support on dips. Resistance, as Steve pointed out 2 days ago. Big trend line coming in here. Also,
that line worked.
Steve, I'm already patting. Steve, yeah. I'm already patting you on the back. You don't have to.
I know. I didn't say it about that. To be honest, I was hesitant at the beginning, but it really worked.
It did. Also, one of the things that really works too is a big Fibonacci level, which if you take this high from here and you take it to the low, the 618 retracement comes in at 71.15, 71.30. So we roughly hit that too. It was just a confluence of resistance that really stuck. So, and you could also say that coming out of this triangle, we completed a move out of the triangle. There's just a lot of confluence up there. So just realize that and on top of it, the NASDAQ really started to roll over yesterday. One of the things that that we have to keep in mind that happened overnight is there's a increased rhetoric, bad rhetoric against China and the U.S. Yeah, I mean, China told us to close our consulate. We closed one of their consulates. I mean, It's not like,
Still heating up.
huh?
It's still heating up.
It is heating up. And then on top of that, you've got, some of these leadership stocks that are just, they're getting rolled right now. And when there's such a big portion of the market, these NASDAQ stocks, they come off. And even if you get some rotation, they tend to be the leaders. So you're probably going to see a little bit of selling come in. And that's the risk I think is building for the Aussie and the Kiwi up here.
They led on the way up. Why shouldn't they lead on the way down?
They could, but again, if it's new money coming in, and then if it stays in the market, right? If it's just rotation, it goes out of Netflix into not Chesapeake. I was almost going to say Chesapeake, but some energy stocks or something else, some mining stocks. You just get a bit of a rotation. But anyway, I got to get off that. I've got to continue on here. So resistance is 71. 71.83. So I'm going to write just 71.75. But even today, resistance is going to be ahead of that. So probably right up to here, 71.25. 0.7125 is going to be resistance. Still bullish though. Let's not forget that. Kiwi 66 cents. Bullish 66.85. Same as yesterday for the Kiwi. It didn't, it's just we had a little double top here. That double top played out. This support should be good for today. But we break below that'll be pretty bearish. Let me just do something really quick. 38% retracement, 50% retracement comes in just basically a pip or two below the 66 cent level. So yeah, if we break below 66 cents, it's going to be kind of bearish. So just keep that in mind. Dollar Canadian. So the dollar Canadian, we created a hammer yesterday. Some of you got to pay attention to. We created a hammer and a higher low. So I think any move back up to the 200-day moving average is going to be resistance up to 135. But for today, let's look at 134.80. 134.80, and I'm going to still keep it range because we never hit new lows, so we never really put us back into a bearish trend. So it's just right now it's just in a range. So dips down to probably this low right here, 133, 134 is going to be pretty well supported on dips. All right, dollar Swiss. Dollar Swiss. Now we are at a weekly trend line right now. This was the chart of the day yesterday. So for obvious reasons, this is going to be pretty key support here, because if we break this, then that's going to get pretty ugly, and that comes in at 91.90.
Okay, it's a chart of the day.
It was a chart of the day, yeah. 91.90. What's that?
I pay attention to him because
yeah. Oh, you were confirming that was the chart of the day. Yeah, it is. Yeah. So we're oversold, obviously, on the daily 4-hour divergent. I don't know where. I guess resistance at this point to really ignite some sort of short squeeze.
Looks a lot like the dollar.
Yeah, I mean, my assumption would be it's probably right around here, 92.70 ish. you know, I guess. So hold on one second, guys. So yeah, 92.70, I guess. Maybe even I would probably even go with 93 cents, you know, somewhere up here. Like that's probably going to be decent resistance today. We're in a bearish trend. Let's take a look at the dollar yen. So the dollar yen in Asian trade. Now keep in mind, last night was a Japanese holiday. So of course, you know, it breaks when it's a Japanese holiday because they know that there's no bidder here, and it just slams through the support. So now any move back up towards 106.60 is resistance. 106 is critical support, right? That's like critical support down here, 106. So now I think bulls are got to be a little careful, especially if we start breaking. Now, the flip side to that is if the dollar starts rallying a little bit, we might, you know, be able to get back above 106.60, possibly. Oh, we'll see. All right. We are in a range with the dollar yen. Dollar index. Let's go over to the dollar index. Do we have data coming out today, guys?
We do have, actually not now, not in 2 minutes. We have later on, yeah.
Okay, got it, thanks. So 94, so we're on support right now. You can see it right here, right? We're on horizontal support at this 94.55. The 618 comes in at 94.45. I'm sorry, 161% extension of the dollar index last bounce. So we might actually get to 94.45. It's possible. We are in a bearish trend. Now, you know, obviously the risk of creating a bottom here or a low and then, you know, spiking back up to 95.60 is, you know, pretty good. So just keep that in mind. But while we're below 95.60, it's a bearish trend. Dollar Mexican peso. So the dollar Mexican peso, I'm a little irritated because it was just trying to take out all of the stops above these highs, above this trend line, and it just slipped back below 42.50. It's very, you know, the dollar Mexican peso is very illiquid and it's very flow driven. So you can see it just, you know, got slammed down. You can see it just got slammed down over the last 30 minutes, you know, as it pushed back below 40 or 22.50. But what we are doing in the dollar Mexican peso is we're not creating lower lows. And that, in my opinion, is keeping the risk of a bullish move there. So just, you know, keep that in mind. We have to, I think that if we get back above 22.72, that's going to be bullish. Support down here is going to be at 22.25. You can see the false breakdown. We'll probably find some support down here anyway, this area. Right where we're at. Nothing like a little false breakdown and then it squeezes back up again. It's just, that's pretty typical of this pair. You get a lot of false breaks back and forth. So 22.25 support, resistance 22.70. It's a range, but we are threatening to break to the upside, especially if we can get a good solid daily close. The US dollar, Norwegian krona, this currency pair almost hit the long-term uptrend line here, 127% extension, 9.03. We came within striking distance of that. And I think that was a pretty good support down here. So that's going to be, by the time we get to this trend line, it's going to be 905. roughly. Okay. Resistance. This downtrend line comes in at right around here. So I'm gonna actually have to mark up like these highs here. So that will be at 931. We break through that and whoops. If we break through 931, it's going to take off this bearish designation, in my opinion. Gold, still bullish, still moving. I keep thinking it's going to pull back, but it ain't pulling back. Those highs coming at 1923. Oops. So all-time highs. And support is at 1820. And let's see, the S&P. So the S&P, we are at risk of a little bit of a pullback here in the S&P because we basically hit the 88% retracement. And it looks like right now the 3,300 is going to offer some pretty good resistance. Oops. Okay, for now, but the support here is now at risk. And if we break through 3,200, that is going to be a bearish event for equities. Okay. Whoops. So we're bullish now, but if we get below 3,200, you're gonna probably see. I would assume that we're gonna see a little bit of selling back towards the 200-day moving average if we can break 3,200. So that would take us back down towards 3,050 roughly. All right. So guys and gals, this is your bias chart. Steve, Stelios, how are you guys doing?
Good morning. Everything good. And you?
Good morning. Good, mate.
It is Friday. It's Friday.
It is.
Yeah, baby.
You guys, I know, being in Greece, you guys can go to different islands and travel around. And I'm gonna go to my backyard and crack a beer. Now I'm gonna walk inside after I'm done. And I'm gonna go back in my backyard.
You always have the option of getting a backyard in Greece.
Yeah, there we go. Now that sounds like a great idea. But that is what's too bad is Greece won't let us in. That's the other issue.
Don't worry, I know some people. Don't worry.
My wife looked at a list of countries that would let Americans in, and it's very small. It's like I want to say it was like 8 or 12 countries will let us through their flying. This is like last week or whatever, and I'm like, oh, that's pretty sad. That's pretty sad. Anyway, but I don't know. Then this has probably changed a little bit. But anyway, yeah, we're still in quarantine over here. So, but it is Friday. At least I get to disengage from my computer. That's pretty good.
Yeah, that's always good.
So what do you guys make of this this dollar? I mean, the dollar still looks pretty weak overall. But I think we're knocking our head up against some pretty key support with the dollar index down at the at this 94.50 level. What do you guys make of the dollar? I mean, I'm overall, I'll just let you guys know I'm bearish the dollar, but I don't think we can rule out a bounce at this point.
I'm kind of impressed from the divergence we're seeing. I mean, so far we've had like a little bit more than 24 hours of, very decent risk off. Of course, nothing in comparison to what we got at the end of February and March, and the dollar really can't find a bid for the time being. Yeah, it's a serious support area, so I wouldn't be shorting it here. But I have to say that if I was bullish the dollar, I would be really troubled by the fact that doesn't seem to even respond in a risk off for the time being.
Yeah, I agree with you. It really is very much struggling. It's very much struggling right now, and it's just not catching a bid. I mean, I look at I look at the commodity currencies a little bit different in a different lens than I do the European currencies. And so what we are seeing is we're seeing the Aussie is easing off, the Kiwi is too, the Canadian, and those commodity currencies being a little softer than the rest of the market. That to me is pretty important to realize that it's not that there is some divergence there, and we're seeing it. Obviously, you look at the Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. You're seeing those cross rates are bidding up, and that is indicative of some risk off. But I think we have to be a little bit, we have to pay attention to how the dollar is acting against certain currencies versus others.
To be also fair, since you mentioned the commodity currencies, Blake, and that's something that people have to have in mind, to keep in mind, is that the dollar index, as we've said multiple times, is very, very heavily influenced by the complex of euro and its correlated currencies like the Swissy and the SEC, and also by cable. And we know that these currencies, none of these are commodity currencies. So commodity currencies are really a rather small segment of the DXY. So that's something that is worth mentioning.
Yeah, they are. They really are. I mean, if you look at the breakdown, I mean, the biggest one that's factored into the dollar index is really the Canadian. I think that's maybe at 13%. So, that's why that you really should be paying attention to what's happening with Norway, Canadian, Aussie, Kiwi, even the emerging market currencies, whether you're talking about the rand or the peso. Those are, you have to look at them in a little bit different light than other currencies. So, all right, guys. Well, I won't take away from your time anymore from your time. I want to thank everybody who is supportive of Forex Analytics. For those of you guys that are, with the family and have are subscribers to what we offer. And if you're not, but you want to help us continue on with these FACE webinars, make sure you visit Forest Park FX. They are our webinar sponsor. They are also, they help us with the reimbursement program. So make sure you get in touch with them. You can Skype with them or email them right here off of our website. So thank you all for your continued support. And Steve, Stelios, I'm going to pass it over to you guys.
Thank you, Blake.
Thank you, Blake.
And good weekend, Blake.
And you too, Dale. Yes, you guys have a great weekend. Dale, don't get too much sand in your
crotch.
All right.
I'll try not to.
All right. See you guys later.
Thank you, Blake. Speaking of the, go on.
Go ahead, Sal. I was just like, I thought it was, dare I say it, cute that Steve, after all these years of doing this, is still tickled when he comes up with a line on a chart that works. It still amazes you, doesn't it?
Yeah. I mean, yeah.
What people ask me, Steve, sometimes, Dale, how do you draw your lines? Do you know what I tell them?
What do you tell them?
With my imagination.
That's actually very true.
Nice.
Yeah. So, you can draw lines, everyone out there. You could always erase them. But experiment. Use your eye, visualize things, and draw a line. You're going to see you're going to be able to do what Steve did with that line eventually. Anyway, that was
I'm assuming
funny.
Drawing lines must be in my genes since both my parents are architects.
Oh, yeah. That could be. It's in the DNA, man. Anyway, that was a great line in Aussie. Nice.
So, speaking of the dollar, the DXY index, I posted the chart on the chat room few days ago. There's on the weekly chart, there's a big support trend line from the 2014 lows, and we got to within a few decimals from that, a few pips from that. But I think the dollar basically is still going to be trading in line with risk, and just like Blake said, I think it will take a strong move in
This
equities.
one, Stelio, we drew it together. This one,
yes, yes. There's going to be a strong. It will take a strong.
Good
move.
imagination on that one.
Indeed.
And I think we'll take a strong move in equities for the dollar to really spike like it spiked in March. I think, like Blake correctly said, if it goes slowly and grinds, if equities slowly grind lower, the reaction of the dollar, it's going to be there, but I don't think it's going to be that big. So, I am still a long-term bear in the dollar, but I think we will see one more spike as equities have a turn lower. I mean, I'm crazy, right? I'm saying that equity is going to have a turn lower. I still think they're going to have one. And
say it as many times as you like, as it still remains legal, because one day soon enough, it's probably going to be some kind of an offense implying that stocks might turn lower.
Yeah, absolutely. And you're seeing now stocks like Intel down 12-13% pre-market, Tesla down 7%, and FANGs are still keeping markets higher, but eventually all that money that's piled into those eventually is going to start either profit taking or
it's really funny that you mention it. Dale said before that Apple got destroyed, and it makes you think the kind of market environment we're into. I mean, yes, it was a very negative day yesterday for plenty of these stocks, as you mentioned, but just think about it. I mean, with all that's happened this year, you get like a couple of days of risk off, and Apple is at what was all-time highs like 4 weeks ago.
Yeah, I know. Yeah, you put it into perspective. Yeah.
Yeah, putting it in. I mean, zooming out, just zoom out and try to figure out where the pullback is. I mean,
it's not even a blip. Yeah, exactly.
Yeah.
But if you look at the world situation, the global situation, Blake mentioned it. China said that they ordered the US to close one of the consulates in one of the cities. I can't remember which one, as a retaliation to what the Americans did with Houston. So it's not an ideal situation. Let's put it this way, globally. And you want the two biggest powers in the world to get along, and not to be fighting over trade or, God forbid, anything else. So I still think the situation is not good. It's not positive for sure.
President Trump said yesterday during his briefing or press conference that the trade deal doesn't mean as much to him anymore.
The what?
And
what are you talking about? The what?
Phase one of the theoretical thing that might have happened.
Oh, is that still a thing? I thought it belongs in the category of Santa Claus. Some kids up to the age of 4 believe in it, but
he's blaming China for COVID. It shouldn't have gotten out of there. So I think he was implying was, compared to COVID being released, a trade deal doesn't mean as much to him anymore because he blames them.
Well, that's a very good point, and it shows that both sides are really not, not seeing eye to eye at the moment.
It's a Cold War. Mark Chandler said a year and a half ago it was a Cold War. We just have to hope and pray it doesn't turn into, a hot one.
Yeah. Yes. Yeah. I mean, that would be.
Although I'm going to reiterate what I've said in the past. Hope and pray is not, a real viable tactic, right?
Okay, I mean, well, build a bomb shelter.
If you really want to have the upper hand in a Cold War against China, which I think we all do, the first and most important thing you can do is not being so much reliant on China for them to vendor financing, for example, the economic model that supposedly you have as a country, or for them to not need them to hold more than $1 trillion of debt.
Yeah.
So it's one thing saying we have a Cold War, and this different thing actually doing something to not care about it. I mean, when there was the original Cold War between the US and Russia, the US won because, first of all, of the Western values, but also extremely importantly, because it had a very strong economy, and the Russian economy was at the brink of collapse.
Yeah, because they couldn't keep up with defense
Yes,
spending,
exactly.
right? So we outspent them,
In
which
essence,
is what we're
yes.
good at.
But something, to be fair, back
We
then,
had the money to do it then.
yes, there was still a lot of wealth that had been created during the past decades to do that, right?
Yeah.
Yeah, I think this COVID situation is changing the way companies source their goods. Their supply chains are changing. So in a way, things are already changing a little bit in what you said, Steve. So the US is becoming less reliant, but still, there's a long way to go for sure.
Yeah, there is.
Yeah. A couple of other things I want to mention. The 1 trillion minimum stimulus plan from the in the US has been delayed until Monday. Let's see what happens there. I mean, I don't think there's any doubt they're gonna roll it over.
Yeah. There's no doubt whatsoever. There's no chance they're not going to do something. It's
Yeah,
it's
this
all
is
about agreeing and
and
finding.
politics. Yeah, more
Yeah.
politics. Yeah.
Yeah.
So we also did have some data today. UK retail sales blew it out of the sky. Very good data. Of course, this is a very volatile series, but expected what was it, 8% month on month when it came in at 13.9%. But remember, there was huge drops before, and we also got PMIs out of the UK, Europe, Germany, France, and the Eurozone in general, and they were all very good beats. So it seems that things are going a little bit better. Remember, PMIs, they're printing in the mid 50s. It doesn't mean we're back to where we were 3, 4,
It
5.
means we've stabilized.
Yeah, we've stabilized and grinding a little bit higher. It's a start, of course, but let's not get ahead of ourselves and think that things are back to where they were before. And we do have US PMIs coming up in about an hour. And that is it. And have a great weekend, everybody.
Okay, Stel, great. Thank you. Have a wonderful weekend.
Thank you, Steve. Thank you, Dale.
Yeah. We'll speak, but I'm not going to be on the webinar next week. Time for some holidays and family days.
Yes.
So let's
enjoy still. No island hopping this weekend.
Huh? No, we're here.
Okay. Enjoy.
Yeah, I mean, he did so much of it that he even got bored of vacations. I mean, go figure with this guy.
Yeah.
Yeah. I'm here.
Now you're going to be here, and I'm just going to be jumping on the webinar to show you.
You taking a vacation next week, Steve?
Yeah.
Oh,
it's
nice.
Long overdue.
Okay.
Okay. So, what do we have? The most important thing we got is summer risk off, and if you remember, we did talk yesterday about the possibility of actually seeing some risk off because we started seeing some signs. If you remember during the webinar, I said that listen, the Aussie has turned lower, the treasuries are pushing higher, equities are always the last one to get the message. A lot of divergences there, so there is a chance that we're going to see a reversal lower. And curiously, it indeed happened with the usual suspects of the move higher, which are the FANGs being the ones that are leading the move lower. And that's why we should talk about this chart, because this is the FANG chart, and we're actually about to test this key support area. A break below it I think can easily start by extending, because this is almost a double top. I mean, if you take the real candle bodies, so a move lower from there should extend towards 1000, and that would imply that we're breaking through this very steep ascending channel, and that might actually point to a bigger pullback. The S&P not so much affected yet. I mean, there is no real technical damage done to the S&P yet, and to be fair, there is no definite technical damage done to the Nasdaq as well, because it's testing this horizontal support area. It's also testing this trend line support. Somebody can make the argument that we've already broken through one steep ascending wedge, but we would definitely need to see more evidence. And the basic, the basic material of a turn lower is always start producing lower lows initially in smaller time frames until you actually can visibly see that on a daily chart as well. So let's see if the markets can sustain another move lower and can actually hold this negative tone into the weekend, and see how Monday goes. And I think that then we can start seriously talking about downside targets. Now, clearly, if, as I was discussing yesterday, if we indeed see a reversal lower, in this case, one day later, we have more evidence that that might be the case, that we might be attempting to do something like that. I would expect that at the very least, that's going to slow down, the fall for the dollar. Keep in mind, the dollar is currently probing the area um, below this spike low, which in essence takes us back to where we were almost 2 years ago. September 2018 was the last time we were trading at these levels. Um, this is also more evidence in what I have been saying for a long period of time, that this whole recovery in the dollar, no matter how you looked at it, really looked to be corrective, seemed to be corrective. And, evidence about that is, let's take the level that we're currently testing, September 2018. So from September 2018, when we were last time trading at these levels, let me remove the magnet, it took for a 9% move higher 543 days, not trading days, days. Okay. So 540 days, let's say roughly, to get that 9% move higher. Now let's see how long it took to go back to this level from that high. 126 days. So basically, it took less than 1/4 of the time that we needed to go up there to retrace to that level. Price and price movement are important, but it's also important putting in context the time, because it's an important part of the equation. It's not only where you're going and in what manner you're going, but it's also how fast you're doing it, because that is usually a very good indication of where the trend is. So, I have to say that I would be very, very worried if I was bullish the US dollar in, any shape or form. But, as we said before, if we are to see some risk off here, and given the fact that we're testing previous lows, I would, clearly not advocate that somebody should be selling the dollar as we speak, right here, right now. But I would definitely not be a buyer either. I think selling rallies is, a better idea. Doing it as we speak, after this move lower, probably not the best of ideas, especially, as I said, if this risk off manifests. Now, if you want to look at it from the FX side, we talked about the Aussie yesterday and the day before yesterday and where it got rejected from. Admittedly, so far, we haven't really moved far away from the rejection area. So it's not like that you're looking at this chart and you're saying, oh, Aussie is getting destroyed or anything close to that. Kiwi, same deal. somebody could argue that it's just backtesting the breakout from this triangle, in which case, somebody can buy it as we speak, and from a risk reward perspective, uh, you know, make an argument that that's actually quite a nice trade. Um, a little bit more worrying if you switch to the Aussie yen and the Kiwi yen, simply because both of them seem to be attempting to form some type of a double top. Here's the Aussie yen and here's the Kiwi yen. As you see, very, very similarly, got rejected from the previous highs. So, I have to say that looking at the Aussie yen and the Kiwi yen, you have every reason to be a little bit more worried. Let's see what's going to happen from current levels, because both of them are backtesting. Here's the Aussie yen backtesting this question mark triangle. Was this the triangle? Because, it's not that we had many areas from which this trend line passed, so it's a little bit arbitrary. The trend line might have been something completely different. And here's the Kiwi yen. Also, I'm not very much in love with this trend line, but I put it there. So let's see what's going to happen from here. Now, if we were having this conversation, if I was actually having this monologue, to be to be exact, several months ago, I would make the argument that this move that we're seeing lower from the USD yen is also indicative of a potential risk of move coming. But having seen how USD yen is really not following risk lately, I would be less enthusiastic. Regardless, this 106 area is an important area of support. So 106 is a key level of support from a technical perspective, and despite showing a lot of disbelief in how much a USD yen move might tell us after having spent all this period coiling and coiling and coiling and producing false breakouts, as it happened 3 times back here. um, Regardless if you really still believe that USD yen is sending signals, a move below 106 is definitely not going to be a good signal for risk assets. Okay, so 106 and below 106, we should be looking for 105.20, the 61.8% fib, and below that we're probably going to accelerate, and I would easily imagine a retest of the 101.20 level that we had seen very briefly down there. So USD yen might, for the first time after a long period of time, be coming again in the scope of tickers you might want to be paying attention to. Now, Euro USD, Pound USD, they remain very well bid, and keep in mind that these pairs can do decently even through a risk-off environment. So if we see risk-off, yeah, we might see them pull back, but don't really expect that risk-off will seriously affect them. Looking at them, and especially at the euro, I don't find it very likely that we're going to see more than a pullback to 114. I think that 114 is going to be perceived as an excellent area to buy the pair, and I'm assuming there's going to be a lot of buying interest down there, unless something dramatic has happened that will have made the euro look like a very bad opportunity. But I don't think we have anything coming out of Europe within the next few weeks that might really scare investors away. So I do think that 114, a likely retest of 114, might prove to be an excellent buying opportunity. Same
I
deal
think
here
there's
with
something big August 8th, Steve, was, according to some guy I interviewed last week, some type of European vote on,
I don't know,
yeah,
Dale.
anyway,
I really don't.
I remember that from an interview, and he was
What
saying that.
I can tell you with certainty, Dale, and I know you're agreeing with that, is that euro is really sending signals here, right?
Yeah, yeah,
I mean,
yeah.
I don't think somebody should be fading it. I think it's very likely to pull back soon, as I think it's likely to see some type of a pullback rather soon from gold or silver. Although I'm going to say again and again and again, I'm not looking to fade them. I'm just looking in buying opportunities. So I'm not looking to be short in any type, shape, or form, gold or silver. Not today, not next week, not the week after that. But
And the same with the dollar. You're looking for,
yeah,
no long dollar positions, just looking
selling
to fade the
opportunities.
dollar, any dollar rally,
Yeah.
and buy any precious metal break.
Yes. Yes.
Yeah.
Exactly. I mean, I really am afraid that we're not going to have that opportunity. But if we get lucky and we see silver at $19 again, I'm not letting that go. I'm going to be buying a lot of it at $19. I'm telling you in advance. Now, having to do with gold, I'm not so eager to buy gold. I have, I have a decent amount of physical gold, so I'm okay.
What's your address? And that's my line anyway. Using my own line on me. That's illegal.
You'll find out when you visit Greece.
All right.
You'll come over for dinner.
All right.
Now, having to do with upside targets, keep in mind that 1919 roughly is a very beautiful confluence of resistances. It's both the all-time high and 261.8% extension of the last corrective move we had in gold. So I still believe that it's going to act as a magnet. I do believe that the market is going to gun down for, getting that tag and a spike, at least a spike higher to new all-time highs. We've been warning since a long time ago that it was a matter of time for gold to also get to all-time highs against the dollar, because it had already been doing so against probably all other currencies on the planet.
Yeah.
So
dollar was the last one, I think.
Yeah, it was the last one, but my prediction is and has been that I think dollar has some serious catching up to do.
Yeah.
And
maybe with euro strength lately, maybe in euro terms, gold is backing off with the strength in the euro.
We can have a look at it immediately. I doubt it's backing off. Probably it's more or less,
sideways.
Retesting previous highs, as you see there.
Oh, okay. All right.
Yeah. I remember when we were looking at that formation. I mean, it was such a beautiful textbook. I mean, you can't get a better looking corrective move than this one. I mean, this type of move is like, 70% of the cases you're going to see such a move. It's going to break in the direction of the previous trend, as it happened indeed. Yeah. So as you see, Dale, actually gold is retesting today. Actually tested the waters at new all-time highs against the euro. I think it does the same thing against the dollar as well.
Okay.
Now let me go through some of your questions. Silver, why not to? I'm assuming you want to write why not buy options on gold or in silver. Yeah, I mean, I'm giving you my market outlook. Now, the type of instrument, the amount of leverage, the position size, all those are the choices each one of us has to make individually. So, for example, whenever I'm saying, oh, I think this is bullish or, this is bearish or whatever, you agree with me, you want to trade in that direction. Now, what type of instrument you choose, how much money you want to invest in that, that's purely your choice, right? I mean, it's definitely against regulations for me to tell you that, but even if it wasn't, I would still not do it, because each one of us has a totally different appetite for risk, has a totally different size of a trading account likely has a totally different tolerance for risk, perhaps totally different time frames that we want to trade. I mean, you might go crazy if you have to stay in a position for 2 weeks.
Yeah.
I
And you
find
know
it
what?
absolutely
From my
normal.
experience, Steve, they really shouldn't blindly just buy calls, especially after a move like this. You have like implied volatility. You could have a situation where you buy silver calls and it just moves sideways and
Yeah,
premium
and then they
decays.
expire. They
Premium
expire
decays.
worthless. Yeah,
Yeah.
yeah, they expire
Yeah.
worthless. Although you're in generally positioned in the correct, side
Yeah.
of the market. Yeah,
You
I mean,
just
it's
might
very
be
likely.
paying up. Yeah.
I mean, speaking of which, and given the example you just gave, after such an explosive move higher, I mean, even a super bullish market can
Correct.
produce something like, something like this, right? Who knows?
Yeah.
So, you might be like, oh my God, this is going to the moon. And it probably is, by the way.
Anyway, learn about options before you buy them.
Yeah.
Okay.
So
Where there's times you could buy a call and sell a higher call against it, verticals. There are many ways that you can kind of take have decay not completely work against you. So learn about them before you buy. Know what you buy, what you know.
now about what our friend is asking here, what about platinum? I had said many, many times in the past that for me, 875 was a key pivot area in platinum. So, needless to say, from the moment we closed above 875, I'm clearly bullish. I mean, long term, I was always bullish. I had said many, many times that platinum is extremely undervalued, and I did expect that in the long term we're going to trade a lot higher. But now, even shorter term speaking, from a technical perspective, after that break above 875, I'm bullish even in the short to medium term. So that's what I think about platinum. When do I reckon is a good time to buy gold? Once again, I'm going to have to tell you what I just was saying. Good time to be buying gold was when it was breaking out above 1360. It is probably still a good time to buy gold if you have a very long term horizon. Because if you're asking me if it's a good time to buy gold for a week, I wouldn't be doing that, right? I wouldn't be buying gold for a short-term trade, up here. I mean, it can still move higher, undoubtedly, but what is your risk reward? I mean, there's no risk reward at the moment. So, although it might be moving higher from here, I wouldn't be buying it for a short-term trade. If you want to buy it for a, rather short to medium-term trade, I would gladly do so if it backtested 1750. So 1750 would be a nice area to load up on gold if we get to see that again. Now, if you're looking to buy even higher, 1820 is another area of interest. So 1820, 1750, these are areas that you can buy and at least make an argument that you have a risk reward that makes some sense, right? Otherwise, unless you just want to buy it and hold it for the long term, which is, I think, it's still going to prove to be, a good trade, and you're willing to tolerate being out of the money for a period of time, which might happen, I wouldn't be buying.
Hey,
Let me
buddy.
go. Do we have an interview, Dale?
No.
We don't. Okay. Where am I from, Steve? I'm from Athens, Greece. Born and raised, both parents Greek. Um, let me see if there is any questions I didn't cover. I think more or less. No, I covered those ones. Euro pound, EU recovery fund. Yeah, EU recovery fund is more or less of a joke. I don't think it's going to make much of a difference. And USD CAD. So USD CAD, Euro pound, and then I'm going to wish you all a lovely weekend and a lovely week because next week I'm not going to be here. I might just pop up. So USD CAD, USD CAD, diverging. It's quite interesting, meaning we're still above the previous low there. My longer term thesis, I do believe that the Canadian dollar is one of the few currencies that might actually still underperform the dollar. So I wouldn't be short the USD CAD. I think, if I want to be short the dollar, which I do, I'd rather do it against other currencies as I've been doing. But also, if I want to be long the dollar, I'd probably do it against the Canadian, as I've said before, because the Canadian looks, rather weak against the vast majority of the currencies. Now, I wouldn't be buying it yet because I'm not looking to buy dollars. And I'm still monitoring this descending channel, which I do think at some point we're going to see quite a nice move higher from it. But until we see that, I would probably not be doing much about it. Okay, so I don't see a trade I like here in USD CAD. So I wouldn't be really, making an argument one way or another as we speak. Now, having to do with Euro Pound, I think the situation here with Euro Pound is rather clear from a technical perspective, and it's the following: we still remain in this ascending channel. I have to say that the manner in which we've been moving in this channel doesn't look impulsive in any way to me. Stelios has argued before that he likes shorting 93 cents. And I have to say that I wouldn't really go against him. He has a very good understanding of the dynamics of Euro Pound. So another push higher towards this confluence, 93, 93.20 would be an excellent opportunity to be short. But if you want to wait for more confirmation, I think the simplest thing you can do is wait for the Euro Pound to break through this channel's trend line support. Once that happens, I think that at least for a short period, there's going to be some more weakness coming in the market, and that's probably going to be a nice trade. Until that happens, if you're long, you have no reason to exit your position. If you have no position at the moment, we're more or less in the middle of this channel, so I don't really see any risk
Point
reward.
toss. Yeah.
Yeah. So I don't really see any risk reward doing anything with it. And to finish up with this, somebody's asking about the pound. I said some time ago that the pound was looking like it would break higher from here, retest 128.13, the previous high, and probably end up retesting the long-term descending channel. There it is, and I still think we're on our way there. Now, the question is, will it follow with a delay the euro? Because the euro was trading in an equivalent long-term descending channel and it has broken above. My gut feeling tells me that it will. But let's first get to that channel, passes roughly from 129 as we speak, and we take it from there. Okay, so everybody, have a lovely weekend.
Have a
And
well-deserved rest, Steve, and vacation. Recharge your battery. We have a lot of things ahead of us this fall.
indeed, it's going to be
Okay.
quite a busy year. And from the company's perspective, there are going to be quite a few major developments in
We're
the year
going
ahead.
parabolic, man.
Yeah, I think people will be quite happy about them.
Yeah.
So
Yeah. Where are you
thank you,
going?
Dale. Thank you,
Going to an
Dale.
island?
It's actually, by definition, it's an island. We can
Yeah.
do a little bit of geography. So I can show you. It is an island. It's a very big island near Athens, which is called Evia. This is the one. This is the one, the big one here. So here's Athens, and this big island. It is actually typically an island because it's being it
Oh, it's
connects
like
just
an isthmus.
via a bridge. Yes, it connects via a bridge there.
Okay.
So we're going to a place called Eretria. It's here in the south area of Evia. It's
Nice.
nice, warm seas. Yeah.
Okay.
Yeah.
Enjoy, bro.
Thank you. And you
Yeah.
don't have to go via boat or
You can drive
ship.
there.
Yeah,
You
you
could
drive
drive
there.
160.
It's a 1 hour. It's a 1 hour, 1.5 hours drive. So it's no big deal.
Nice. All right. Well,
Yeah.
we'll miss you
I'll
and
miss you
have a
too.
good time. But I'll bet you $100 that you pop into a webinar next week.
Yeah, I will. I will definitely do that.
What? Take the bet or pop in?
I'll pop
Anyway.
in, show you a
All
little
right.
bit of the
Oh, okay.
Greek
Yeah.
seas and the sun and
All
everything
right. The
else.
little bit of the travel section of Forex analytics. Okay.
Yeah.
All right, everyone. Listen, have a great weekend, everyone. Thanks for hanging out with us. We're doing our best to lay it out on the court every week to build you up, edify you, and we're always glad to add value. Hope we're accomplishing what we're setting out to do. All right, Richard, Skip, Scott, everyone, have a great weekend. You're welcome, Brock, David, and enjoy, recharge like Steve. Get ready for another, could be another wild week. So, adios. See you, Steve.
Bye
And
bye,
remember,
coach. Bye
don't
bye,
just
everybody.
count your pips and your
Count
gold
your blessings.
coins and your silver bars. Count your blessings.
Indeed.
All right. Adios.
Bye bye.